The reason is this because most of you guys always come to me and ask me, I don't have laptop or don't have computer to do analysis. All right, I don't have computer or laptop to do analysis, so I do fatigue sometimes. And if I could remember back then when I started trading new, I always used my phone to do analysis. All right, so I will be motivating you guys on how to use phone to do analysis. I'll be showing you guys. All right, I already dropped a video pertaining to how to set your trading view. I already dropped a video pertaining to that. So sometimes once most of you guys share your charts to me, it looks somehow messy. So all right, so if if you have a clean chart, it's going to help you a lot. If you have a clean chart, it's going to help you. Please, I already dropped a video in my YouTube channel on how to set um, your trading view. So I'll be moving to my phone right now. So I'll be taking it off on the system. I will be moving to my phone right now, so that just give me some seconds or a minute so that I can navigate through my phone, so that I'll be using my phone to do today top line analysis. All right. So I've navigate through my handset. So let me share the screen. Let me share the screen. All right. So I'm using Samsung. So let me share the screen from there so that you guys, let me go to my trade view. All right. As I say, this is USDJPY, and I'm going to take off these charts. I'm going to take it off. So I'm going to take out my analysis. So I'm coming. So I'm going to find out USDJPY. I'm going to take it out. So don't think you cannot use your phone to do analysis. You can. Please, you can. All right, so I'm going to go to the daily time frame. This is the daily time frame. I know the disadvantages of using your handsets to do top analysis because the screen is small. But all you just need to do is to continue doing it. The reason why I'm saying that is that that is the only good tools you have for now. All right. So as time goes on, you are going to purchase more and more gadgets. All right. So now this is a higher time frame. You can see how I zoom out my chart, right? You can see how I zoom out my chart. This is a higher time frame. If you can see, we have this break or structure to the upside. Now, and also notice something in your guys' charts. Also notice something in your guys' charts. You know that your phone screen is little. And even though I noticed you guys used to put volume bars, right? So I not use volume bars to trade, please. So I'll notice that that will make your charts look more dirty. All right, you can see how the chart is clean, right? You can see how the chart is clean. So I need you. You can watch the video on how to set your trading view in the YouTube channel after this. All right, so after this break of structure, where do we see this other block that causes the break of structure? You can see how price reacted from that other block that causes the break of, right? I'm coming. That is the other block that causes of structure. Now, after that block here is the other block that causes the break of structure. Now, I want us to move to 4 hours time frame. So I need you to pay attentive to coming. All right, this is the 4 hour time frame, and you can see the chart, right? So all I just need to do is to tap on this arrow key to move me to the recent price action. Now, I need you to understand something. Now, we have this break of structure to the upside, right? So this is the break of structure to the upside. this is the break of structure to the upside. All right, that is the last break of structure. And what do you see there? We saw price was taking out liquidity. Initially, this is the order block that causes the break of structure. This is the order block that causes the break of structure. But once we read the internal structure here, please, I need to emphasize this. You know how to read internal structures. Not all structural break in internal structures you are going to read. Right? Please, I need you to note that. As I said, you can, if you cannot hear me or you cannot see the screen, just please drop a message in the group so that I will know. All right, so we have this internal break of structure to the outside. All right, this is internal break of structure. And after that, we also have this break of structure. You can see this break of structure. We have this break of structure here. Now, since this is the break of structure, right, we saw price giving us what? A market structure shift here. This is a market structure shift. Don't worry, once we go to the 2 hours time frame, you're going to see it. We saw a break of structure also sitting down here. Now, I need you to note something. SMC, in SMC strategy, as I said, if in the mentorship program, which I taught you guys, all right, I always say liquidity is the best. Find your liquidity. But first, you must identify what your directional bias. I need you to know that you must identify your directional bias. So after that, we have this other block which is here. This is another block. So we have this other block which is here. Now, I want us to move to 3 hours time frame. And this is our 3 hour time frame. Coming. Right, so this is our 3 hours time frame. In the 3 hour time frame, we saw price is giving us weak rejections here and not a clean market structure shift. But it's a market structure shift from here, but this break of structure will not allow. All right, so after that, let's refine our order block to the upside. Let's refine our order block to the upside here. I want us to move to 2 hours time frame. Now, price has already taken liquidity, which is called structural liquidity from the highs. It's called structural liquidity. Price has already taken out that structural liquidity. You can see how price take out liquidity from here. What I'm talking about, I'm coming. Let me find my parts tools. So we can see how price take out liquidity from here, and after that, price did what? Price reverse to the downside immediately. That's what we call liquidity grab. All right, so liquidity sweep is different from liquidity grab. So I need you to note that in our 2 hour time frame, we see that price has given us what? Market structure shifts. So we have a market structure shift from here. But before that, I've already sent this setup to you guys. Like before this move to the downside, so price gave us a market structure shift from here. So I wanted a price from this move here, but price is not heading to the downside. I'll send this setup to you guys last week here. This is the last break of structure. We have this break of structure here. We have this break of structure here. All right. We also had another break of structure to the upside. All right. So we have market structure shift and have what? Break of structure. Now I want us to move to 1 hour time frame. Now in 1 hour time frame, what are we going to do? We are going to refine this order block here, because this order block here is going to be our point of interest. I need you to understand that this order block here is going to be a point of interest. And once you look at this zone here, I want to zoom in. All right, I want to zoom in. You can see we have this liquidity in which price take out. This is the last liquidity price take out. I want us to refine our order block, and our order block refinement is here. All right, order block refinement is here. So I need you to know that. Let's move to 45-minute time frame. 45-minute time frame. I also want to refine the order block in 3 time frame, which is 15 minutes. All right, now 15 minutes time frame is our entry. For me, I love using the 15 minutes, or like it shows me everything in both. So I want us to refine it. This is how to do a refinement. All right, I want us to move to frame. Let's also refine it to a 30-minute time frame order block. I'm coming. Network here. Come in, please. Although rain is falling here. Now, what I'm trying to explain is this. Now, this is a premium. All right. This is a premium level, but we are not going to buy from this premium level. I've already explained what is this. Now, for instance, let me say, now, since we are going to purchase from the highest price and set to the lowest price to get some gain, all right? So we are going to purchase this from the highest price and sell at the lowest price. That's what I mean, all right? That's what I mean. So let me just go back to my system so that. Now, what I'm saying is this. Now, remember, this is a premium level, right? Also, I need you to remember this is what? It's also a premium level. All right? So, right now, price is reacting from this premium level here. But this level here is called an inducement. All right? So, this level here is called an inducement. So, we need price to take out this level here because an inducement level. So, we need price to tap us from this premium level. Now, I've already talked about something which is the discount pricing array and also the premium pricing array. Now, the discount pricing array helps us to buy cheap and sell high. And while the premium pricing array helps us to purchase from the highest price and also sell at the lowest price. Now, what this means is this. Now, for instance, let me say we have this movement. All right. We have this movement which break structure to the upside. From this movement here is called let me say this $100. All right. So let me say this is $100. So we don't want to purchase from $100. We don't want to buy from $100. That is what I'm saying. All right. So from this line here, from this point of interest, which is here, from this point of interest, I mean the line here is $100. This is a discount pricing array. All right. And this is also a discount pricing array. And this discount pricing array here, I'm going to color this line let me use black. So this discount pricing array here, we are going to buy from where? We are going to buy from $80. All right. So we are going to buy from $80 from this discount pricing array. Now, I want to ask you guys a question. Which discount pricing array are you going to buy from? since you are buying cheap and want to sell high. Remember, once we use our Fibonacci retracement tool, let's take it from this swing high to this swing low. All right. So as I said, anything below 50% is a good discount pricing array to buy from. And from there, we have the lowest discount pricing array. Now, in this lowest discount pricing array, the $80 is sitting at the lowest discount pricing array. All right. Why this $100 is sitting at the highest discount pricing array. Now, no matter what happens, we always want to buy cheap and sell high. All right. So that is why we are going to buy from $80 and sell to the highest price. The same thing works with the supply zone. Now, from this supply zone, for instance, let's say price is going down. We also have a move here before breaking structure. All right. Remember, we have this premium pricing array, and we also have this premium pricing array. Now, in this premium pricing array here is going to be let me say $80. Now, I need you to understand this. Remember, we are going to buy from here. We are going to buy from the highest price because this is premium pricing array. It's not the discount pricing array. I need you to understand that. Right? It's not a discount pricing array. So we are going to buy from the highest pricing. We are going to buy from the highest pricing. All right? And where is the highest pricing? So this is the highest pricing, which is $100. So we are going to buy from $100 and sell to the lowest price, which is here. Now, once you use let's say you use your Fibonacci retracement, it's also the same thing. I need you to take it from here, from the high, from the swing high to the swing low. All right. Now, anything above 50% is a good premium pricing array to purchase from. All right. And since this is the highest premium pricing array, this $100 is sitting at the highest pricing array. So we are going to buy from this premium pricing array because it's the highest price. All right. We are not going to buy from this lowest premium pricing array. The reason is because we are selling. I don't know whether you guys can hear me clear because rain is falling over here. All right. So because we are selling. So the second goes to the charts. I want us to go to our chart. All right. Now this is our charts, and we have this premium pricing array, which I just explained to you guys. All right. So we are not going to purchase from this premium pricing array. We are not going to sell from here. All right. We are going to use it as what? Liquidity. I'm going to use it as liquidity. We're not going to buy from here. All right. So all we just need for price is to take out liquidity from here. But also want you to understand that price is also reacting from this premium pricing array. Yes, price can react from premium pricing array, and also price can react from there and also give us a set to the downside. But we are not considering that angle. We are not considering it as our point of interest, right? So we need to keep liquidity. We need to keep room for liquidity. Our way to get is you need to find the direction of the market, and after the direction, you need to deploy. You need to find liquidity, right? You need to find liquidity, and after liquidity, you need to find an inefficiency. I already explained what an inefficiency is. All right. So this is an inefficiency. So we need price to return back to this inefficiency to make it efficient. All right. So we need price to return back from here to make it efficient from here. So this is an imbalance because when we see a move here, we saw that the sellers left out a gap. And that gap here, we need price to return back to that gap and pay in that gap. We need price to make there to be efficient. Right?
Remember, always follow your SMC strategy. It's always important. So at this point, we are going to also wait for a price to get, but our stop loss is going to be at low this signal. Remember, that is our 45 minutes block. So let me just go back to 45 minutes. Let's just rewind it back. It's our 45 minutes block. So if price is about to that block, so there is about quantity of interest. So we need price to make this gap to be efficient. This imbalance we are seeing here to be efficient. Right, so we are going to position at that point. That is the reason why I choose here. So I'm not going to increase my stop loss a little bit. I'm going to you guys personally how I trade is this. I always love increasing my SAPs. Alright, I want the market, I want my stop loss to be great. What I do is to reduce my loss size. I don't want the market to stop me out of the direction. So I don't want to do that. But also, most of you guys sometimes, the next thing you're going to do, you got everything right. You got everything right. But the next thing you're going to do is to reduce. Bring out of your side, right? So your stop loss picture. Price can take you out from here immediately, right? Because your stop loss is tight. Price can take you out here immediately before reversing. But once you allow the stop loss to take some little break, right? So the market will hardly take you on. So I'm going to make my stop loss, I think, 48 pips. So that's going to be my point of interest. Right? And this was 8 pips. I'm going to reduce my loss side. So the next thing you need to target is this: your risk reward ratio. Where is the risk reward ratio? Other experience. So risk reward ratio is good. Now, I need to understand. I'm going to draw this two risk reward ratio. Alright, so this is the two risk reward ratio from this imbalance. Right? The two risk reward ratio. I'm going to mark it. Z is going to be my base TP. Alright? That is going to be my second TP. My second TP is going to be on this other block. Remember, this is a demand zone. I need to understand this. What is another block? What is another block? I need to also understand that. Right? This consolidation candlestick here, all this project candle we are seeing here is another block. There is an order being placed here. I need to understand that place. Yes, an order being placed here. Alright? So, all you just need to do is like, once you understand, you're going to extend your focus a little bit to our place. 2.7 ratio. Alright? But if you want to use this here, you need to remember that this is an order block. And there's a lot of orders being placed here. There's a lot of orders being placed around here. Now, the reason I don't want to look for a buy at this stock here is just because of the direction of this trade. I don't want to look for a buy from this point of interest. Because all what I'm seeing here is, I can see the price is just like, I can see this break construction to the upside. Alright? I can see this break construction to the upside. I need to understand that. I can see that. But I just want to focus more on the sell than this buy. I just want to focus more on the sell than this buy. So I want the market to tap in here to give us a sell. And after that sell, we move to the next side. Alright, so I hope you guys understood what I've just explained so far. So that is the reason why I use it as my point of interest. So that is the reason why I use it as my point of interest. Remember, if you want to take this from here, is your STP, which is 2 risk reward ratio. From here is 2.7 risk reward ratio, and here is 3 risk reward ratio. But I always recommend you to take what? To always 2 risk reward ratio. I don't think you are being in a trade whereby you are making profits. I've been in a trade whereby I'm making profit, right? I have to risk reward ratio. Instead of me to take as to risk reward ratio, I saw price because I'm targeting 3 risk reward ratio. If I'm not mistaken, or 4 risk reward ratio. So before I know price, return back, I give a break in. So I close out trade with break in. So that's why I always recommend you guys to take out trade from 2 risk reward ratio. Don't be greedy in the market. So once you are in the mentorship program with remember I talk about the psychology of what? Psychology of greed. Now the psychology of greed is telling you that, oh, I need you to hold this trade much longer. I need to hold this trade much longer. So that's what psychology of greed is always going to tell you. Hold this trade much longer. Alright, so I want us to I also send out this analysis to you guys. But maybe most of you guys would have forgotten about the analysis. But this analysis is all about it's a swing trade. It's a swing trade. So it's not a scalp. It's a swing trade. So it's for 2 hours because I'm taking this I'm taking the set from 2 hours center. Right now, I need to understand out. You can see the price has taken out this the break of structure. We saw price take out, give us another break of structure to take out liquidity from here. And after that, price return to take us to liquidity from here, giving us what? Liquidity. And we have a market structure sheet from here. Alright? So after that, we have a break of structure to the downside. We have also another break of structure. Now, I need to understand that the reason I use this other block, which you are seeing here, I took it from 15-minute time frame to have a well-refined other block. Alright? So, but this is the 2 hours other block, but I don't want to use the 2 hours other block. I want to use the 15-minute other block to get a well-refined entry. Alright? So, to get a well-refined entry. And what does you say? The swap price giving us a liquidity. Alright? This is liquidity. So you can see our price has taken us liquidity. So the market closed here. So what I'm expecting on Monday is this. I need the market to tap in. Even though it's going to take out liquidity, you can see how I'm giving some space for the market to take trading. Alright. So we need price to return back from here to play out liquidity from the buy side. Alright. We need price to play out this buy side liquidity. Because here is playing the sell side liquidity. So that is also a concept of SFC. Once you know how to do your top-down analysis, remember directional bias is very important, right? So you have seen how I used to do my top-down analysis from the direction. And also, sometimes SFC conflicts do fail, right? So sometimes it's not fair, but once you have a conflict, but 90% of the time it does work. Right? Once you don't see anything like you don't see any conflicts, you don't see any reasons to take a particular trade from. I don't want you to like take a trade from me because you do not see any reason to take a trade. Right? So I'm going to analyze the last pair. So I'm going to analyze the last pair, and it's going to be let me just use let's use European USD. There's something I want to show you guys in that. Liquidity, as I say, liquidity. Now you can see the charts. Now ask me, why do I use here as my point of interest? Oh, I have this break of structure to the upside, so I have this other block which is sitting here. Why do I use this side as my point of interest? I want for you to buy from here. This one pricing arrays and always identify liquidity. Alright, so I also share the setup to you guys, which means the setup on last week. So this is the setup last week because if you can remember this move here, if you can remember this move, when price reacted for this supply zone which is here, so we saw this move there and I share this setup to you guys. Now the reason why I share this setup to you guys is this. Now we have this liquidity. I did not use that as what? Point of interest. We also have this liquidity sitting here, but I don't use it as point of interest. So I use here as point of interest. But price reacted from this point of interest price didn't react from this point of interest and give us this move to the other side. The price reacted from the supply zone. And right now, we are having price returning back from here. So why do I use here as my point of interest? So I will be doing top analysis from it. So I want you guys to understand the reason why I use that zone as my point of interest. Right? I will be doing some further analysis on it. So let me just take our series charts. Let me just take it out. All right, so I want us to move to our daily time frame. Let me show you the reason why I use it as my point of interest. All right. Now, this is the daily time frame. This is the daily time frame. Our price is reacting from here. Key demand zone in the daily time frame. And this is it. Demand zone here. Now, I need you to understand something. Now, we have the last liquidity in which price has taken out here. This is liquidity. I need to know that. This is also what? Liquidity. Which gave us what? Market structure shift. And price is reacting from where? The demand zone. All right. Now, let's say one would take this trade from, like we're position traders, we want to use the daily time frame to take this trade. So me personally, I will position it here. And I'm going to use all here as what? Liquidity. I know you can see this imbalance here. All right. But this imbalance here you are seeing here is sitting at point of liquidity for me. Right? So let me just move to the 4 hours time frame. Now remember, price is reacting from where? The demand zone. Here's the demand zone in which price is reacting. Now from this demand zone, we had what? The last break of structure. Where is the last break of structure? This is the last break of structure. Let me mark it out. This is the last break of structure. All right, so we have, let me zoom in the charts. So we have the last break of structure at that spot. But I also need you to understand something. We have price was taking us liquidity from here. Here. We also have price taking us liquidity from here. Here. And price reacted from here. This supply zone, making this supply zone as what? As a resistance zone. All right. So price is going to making that zone as resistance zone. Now from here we have a break of structure. From here, I'm sorry, this is the last break of structure. I'm sorry for not seeing it. So we have this last break of structure which is sitting here. This is the last break of structure to the downside. We also have this break of structure. Let me just bring this. We also have this break of structure, right? And we saw price reacting from here, this zone. Now let's move to the 3 hours time frame. From 3 hours time frame, we got a market structure shift from here. And we had another break of structure here. We also have another break of structure. I hope you can see how we are getting the directional bias. Right? So we are getting the directional bias. So this is a resistance zone in which price is moving to the downside. Now, I remember I was saying in the set setup, but once I go back to the chart and understand something, that this supply zone here is more of inducements. All right, it's more of inducement zone. Now, I want you to understand something. Now, after that, we have what? we have price reacting from a demand zone, right? A demand zone. Now, I want us to move to like 2 hours time frame. In the 2 hours time frame, we saw price mitigate this order block, which is what? Perfect, right? So I want you to see the reason why I use the 1 hour order block to take this, to use this as my point of interest. So price reacted from this demand zone. I need you to understand that. Price also reacted from here, this demand zone. Now I want us to move to 1 hour time frame. Now once you go to 1 hour time frame, I need you to understand something. We saw price in what? Price did not tap in from 1 hour order block. And that is the reason why I refine it. You can see how price missed out from here. Price did not react from 1 hour order block and have an outbreak of structure. We saw price return back here, tapping here, right, which is an inducement level, right? So this is the reason why I use this point of interest, use that order block as my point of interest. All right, since price reacted from this order block, which is here, and this shows this move to the upside. Price also reacted from here, the supply zone. And you can see we have this break of structure to the upside, clearing outward set side liquidity. All right. And after that, we have this other block here. Now, I want to show you something. So most people will be looking to take trade from this other block. All right. Most people will be looking to take trade from this other block. I'm not going to allow you that price moves for that other block. But me personally, I'm not going to take there as my point of interest. I'm not going to use there as my point of interest because we have a point of interest what? Below it. Right? So we have a point of interest. There are many ways in which smart money concept is going to like, smart money is going to like our structural liquidity to you guys. But once you do not understand this, you're going to fall into the trap. Right? You're going to fall into the trap because liquidity, you must always find as liquidity. You are not in haste, you're not in hurry to take any trade. Now, we need to understand this. No matter how many times you do not take trade, you don't need to chase any trade. You don't need to chase any setup. You don't need to chase any setup. All you just need to do is to position as a sniper. All right, I need to position that way so that no matter what price is doing, it's not your concern. All right, so no matter what price is doing, it's not your concern. So these are how I take my trades. And if price is not happening, I'm going to be fine. Right? It's better for me to miss trade than for me to like set trade in a point of interest that I'm going to get liquidated, and later I'll be saying, "Oh, I'm taking a loss." So you need to understand that. So here I'm going to use it as liquidity. I don't want to go to the 15-minute time frame. So I want us to use this order block because it helps me to summarize the charts, right? So at this point right now, we need the market to return back from this point of interest. We need the market to return back to this point of interest. I'm going to increase my lot size a little bit. So my lot size is 48 pips. Right, so we need price to return back to this point of interest. So the second thing you need to note is your risk reward ratio. Now I want to target 2 risk reward ratio. Where is 2 risk reward ratio? Right? From here is 2 risk reward ratio. This is the target. This is the first target, 2 risk reward ratio. Then your next target is from this high here. Right? From this swing high, because price. Now, this is the reason why I told you guys that I rather work with confirmation. Now, once you can see this move here, this move will not take out liquidity from this side. This move do not take out liquidity from this side. And those people using this point of interest here, price is going to take them out. and take out liquidity from this side, all right? So we need price to take out liquidity from this side. Remember I said price move to liquidity, right? So price move from liquidity to liquidity, and price also move towards to balance inefficiencies, right? Price need to cover inefficiencies to make it efficient. So that's how the market move, right? So you need to prioritize the discount pricing array. I also need to know your premium pricing array. So obviously you really need to work on it. Once you work on it, it's going to like help you very well. Right? So there are many concepts which I always use together with my SMC concepts. All right, like example, I use the AMD, which is accumulation, manipulation, and distribution. All right, I also use the optimal trading entry. I use the discount pricing array and also the premium pricing array. So all those things are very much important for you to know, right? They are very much important for you to know. I always explain this in the mentorship program, which I did, just the 1 month mentorship program, right? So all we just need to do is we need pray. I'm not going to say set up, not going to fight, right? So this is the market, but our position in a good place. So anything that's happening in this market, I'll take it, because sometimes the market is not 100% certain, right? I need to know that the market is not 100% certain, but I love that I follow my plan. I love that I follow my rules. I have an inefficiency in which I need price to make it efficient. I have the liquidity here in which I want price to take out liquidity. So I want price to return back here to move me to the upside. So once you find, like, once you have joy, once you also have patience, you are a patient trader, you're not going to be like getting stopping out all the time in the market, right? So you're not going to, the market is not going to be stopping you out all the time in the market. So I need you to understand that, please. So I'm going to stop here. I'm going to stop here. This is going to be like from this month, right? So I will be traveling to my hometown next week on Saturday to bury my dad, right? So I will be traveling to my hometown on Saturday to bury my dad. So I think the next time that we're going to have our weekly top-down analysis, maybe it's going to be next month, right? It's going to be next month. After that, pertaining to the mentorship program, the advanced mentorship program, I already stated the advanced mentorship program is going to come. It's going to start from first Monday of next month. All right, it's going to be first Monday of next month. I need to know that it's going to be first Monday of next month. Yes, 10 people who have already started the advanced mentorship program. So now my opinion is whether I'm going to like extend it, but I don't want too much people in that program, because right now I just want people that I'm going to coach more. But I just want I want the class to be interactive. I want to really know the problem of that trading journey, because I can see that most of you guys, maybe you have started trading last year or even last year, but you are not seeing any improvement. So I just want the program to be interactive. That's why I don't want to like take much number of people, right? So I want the program to be interactive so that I will know how I can help them. That is the benefit why I'm doing this program, because identifying major structures, as I already said, not all breakout structures we can use. Now I need you to understand something of this. Now, you know SMC conferences, right? So we are going to say we have our breakout structure. I need a position from the breakout, other block that causes the breakout structure. Now, I need you to look something in this chart. Remember we have a breakout structure to the downside. Do we have a breakout structure to the downside? Yes, we have. We do have a breakout structure to the downside. Now, we have a point of interest here. And also, we have liquidity here. Yes, we have. Well, what do you see? I need you to understand that before this move, we have a market structure shift from here. I know price reacted from the supply zone here, which breakout structure to the downside. We also have a breakout structure to the upside here, right? So now, this is a break of structure. And most of you guys want to say, oh, this is a break of structure. I just want to like take my trade from here. You can see how price reacted from an imbalance and take out liquidity from here, right? So not all break of structure that you see in markets is relevant, right? So I'm going to explain that in the mentorship program. I'm going to give out, there are major break of structures and there are minor break of structures. There are external break of structures. Yeah, by internal break of structures. Now, pertaining to this break of structure, which you are seeing here, is called internal break of structure, which is liquidity. Internal liquidity. There are external liquidities. So I need you to understand that internal liquidities, external liquidities. All right. So now you can see this, all these kind of stuff you are seeing here are internal liquidities because you can see here, all right, these external liquidities from the sell side liquidity, right? You can see how the buy side liquidity take it out from here, all right? So these are to always work with liquidity. So you need to understand how liquidity works. And once you really understand how liquidity works, it's going to help you. And also something I'm going to also emphasize is this. Most of you guys may get this right, but sometimes you'll be afraid to take your trade. Why are you afraid? Don't be afraid to take your trade. You can't go that way, all right? So I'm not going to lie. I've already experienced that. I've experienced that when I'm new in trading. I'm afraid. Once I saw this setup here, I'll be afraid to execute my trade. I'll be afraid to execute those trades. But now I need to, how like I get rid of it is that I master my risk management, right? I master my risk management, right? Now, here's how to do risk management. Now, for instance, let me say you have $100, right? So the $100 is your trading capital. This $100 you are seeing here is your trading capital. So I want to show you how to do a risk management plan. This $100 here is your trading capital. Now, I already know that I already have this $100. I don't have any other funds. Now, from here, if you don't have any other funds, I just need you to be risking $5. But once you have funds, another capital set aside, I just need you to be risking what? $10. Knows what I said, right? I said, if you don't have funds, if you don't have enough capital, I need you to risk $5. But once you know you can make up another capital, I need you to risk what? I need you to risk $10 on it. Now, remember, you are going to take 10 trades to burn out this $100 if you are risking $10. You are going to take 20 trades to burn out, to blow off this $100 trading capital account if you are risking $5. I need you to understand that. Now, for instance, let me say you are using $10. Now, remember, you take a loss. Always fix a particular amount you want to risk. If you are risking $10 in any trade, risk $10 in that trade. I don't want you to risk above more than $10 or below more than $10. Once you set your risk amount, I already explained this risk amount, risk reward ratio, and risk percentage. I explained this in the mentorship program. All right. Now, this is the risk amount. All right. This is the risk amount here. Remember, this is my trading capital. But this is the risk amount. Now, for instance, let's say the next thing you need to do is to time your risk reward ratio. I need you to have a fixed risk reward ratio. Now, the fixed reward ratio you are going to have is going to be 2 risk reward ratio. Remember, 2 risk reward ratio. You are going to risk 1% to make 2%. You are going to risk $100. You are going to risk $10 to make $20. Right? You are going to risk this $10 to make out what? $20. That's how risk management plan is. So don't think you just wake up in the morning, you have just have your capital, you just want to take any trade without risk management. Now, the difference between us with people outside there which are looking trading as gambling is that they do not have the knowledge. So I don't want you to think like them. Remember, trading is a business. Once you treat it as business, it's going to be a business for you. It's just like the same. Let me say you are selling a particular product in markets. So these are trading is. You are using your money to do business. All right. Trading is a business. You're using your money to do business. And from there, sometimes you may have a damaged goods if you are selling physical products. You may lose. That is the same thing with trading. Because in trading, you have to apply proper risk management, and anything can happen. You will also lose your money in it. Right? So right now, I'm going to target what? This 2 risk reward ratio, which is going to be $20. I'm going to risk in that. But sometimes, once you have opportunity, you're going to target 3 risk reward ratio, 4 risk reward ratio. But I need you to understand your first profit is going to be $20, which is 2 risk reward ratio. Now, for instance, let me say you take first trade. Right? You take first trade and you lost 1%. And that, remember 1% is 1 risk reward ratio. You lost 1%, which is 1 risk reward ratio. That means you lost your $10. Now you are taking another trade. You also lost 1%. You also lost 1%, which is also another $10. Right? Which is also $10. Unfortunately, the next trade, the third trade you are going to take, you are going to make what? 2%, which is 2 risk reward ratio. At this point, are you at break even? I need you guys to answer. Are you at break even or not? Are you at break even? Yes, you are at break even at this point. All right. So remember, you lost the first 1%, which is 1 risk reward ratio. You also lost the second percent, which is the second risk reward ratio, giving us the total that you have lost $20. Right? Now your remaining capital here is going to be what? $80. Your remaining capital here is going to be $80. So I need you to understand that since you have lost this, so unfortunately the third trade you took, you won 2 risk reward ratio. Now remember you lost $20. You take your third trade, you won 2 risk reward ratio, which is $20. Now you are break even. Your capital is $100. So these are to do our risk management strategies. All right. So there are many ways to implement risk management strategies. There are many ways to implement psychology in your trading. Right. This risk management strategy you are seeing here has helped my psychology. Because I already know that trading sometimes I will lose in trading. So this risk management strategy here I just implemented. This is just one risk management strategy I just implemented to you guys, has helped my psychology. So alright, so I don't want you to be afraid when taking your setup. Please, I need you to analyze your charts. Once you analyze your charts, stop taking signals. I don't love signals, right? Stop taking signals. So once you analyze your charts, I need you to take your trades. That is how you build your confidence. Don't be afraid in the market always that you are going to lose. Yes, you are going to lose. That's why you are a trader. Once you lose, the next you will say, "Oh, this is my mistake. I won't try that mistake anymore." So I need to write that to note that. So I'm going to stop here at this point. I wish you guys good trading weeks, and also remember, apply proper risk management. Shalom.